OK, well, let's go to our first slide. Let's look at the data released over the European session.
OK, so quite a rich morning for data, really. So we'll start with UK retail sales for May. The month-on-month figure came in at 0.2% versus a forecast of 0.1%, so slightly better there, but only marginally. In terms of the year-on-year numbers, however, we got a read of 4.4% growth. That was against analyst estimates of 4.6%, so somewhat disappointing there, perhaps, that we haven't seen retail sales continue to pick up, although obviously few more weeks of good weather like we've got today, and that could easily be redressed.
Yep.
It was also today the day for targeted LTRO, one of the long-term refinancing operations that the ECB has been involved in, where it makes money available to banks to borrow against eligible collateral. There was a take-up of around 73.8 billion euros today by participating banks. That's about 20% higher than the expected forecast of around 60 billion, and nicely in the middle between that figure and the previous read of 97.8 billion. You could infer from that banks want to lend more money, by taking this LTRO money. However, you could also take the view that they're stocking up on a bit of ready liquidity ahead of a possible denouement in Greece on the 30th of June. So
okay,
take your pick out of that. And then we had Eurozone wage growth data as part of the wider Eurozone total labour costs. Wage growth year on year, this is a Q1 number I should say, but year over year, we're up, wage growth was up 2.2% above the same period in 2014. Interesting to note that was 2 times the gains we saw in the third quarter of 2014. So wages are picking up both here and in the Eurozone. Eurozone wage growth is a component, as I've suggested, of the total labour costs in the Eurozone. Again, that number for Q1 was out. Coincidentally, perhaps it came in at 2.2% growth already. What's worrying here, as we've discussed before on the show, is whilst it might be beneficial to see some inflation creeping back into the Eurozone, European wage or total labour costs are already very high in comparison to other parts of the world. So it doesn't bode well for competitiveness going forward, even if it is perhaps a sign that the economy is coming back to life. And then the Eurogroup's meeting in Brussels, we haven't heard anything out of there, really, a few sound bites from 1 or 2 of the leaders, but nothing concrete. And obviously the top item on their agenda will be Greece.